Let me know when everybody's in.
Right, everyone is in that was in the waiting room, and I'll just continue to
Okay,
people as they pop into the waiting room.
wonderful. Good morning, everyone. My name is Kathleen Stack. I'm the Chief Marketing Officer with the Hudson Gateway Association of Realtors, and we are happy to be here today as principal members of FIOPSI. And I welcome all of you to the call or the webinar, and welcome to our HJR members and all the FIOPSI and other members who've joined us. I want to talk about our topic today is digital technologies and the future of real estate, and we've gathered an amazing panel. We have Christina Prostano, Alina Abe, and Dan Lazar. I'm going to introduce Christina, and then Christina will introduce the panel. Christina marks her 18th year working for Manhattan and Brooklyn real estate markets with Compass. She runs a global team. She is a hyper-local expert in New York City, but also part of an international collective of like-minded agents around the globe, is fluent in international real estate, is a FIOPSI member, CIPS, and she's co-chair of the HGR Global Business Council. She's involved with PropTech, tokenized and fractional ownership in real estate, blockchain technologies, crypto. She's a crypto certified agent. She founded and runs the CP Global team at Compass, as well as the international real estate community on Clubhouse, where she hosts a bi-weekly conversation on local real estate markets around the globe. And she also holds a certificate in commercial real estate analysis and investment from MIT. So welcome, Christina, and I'll let you take it away with the rest of the panel. And thank you again.
Thank you so much, Kathleen, for having me. Thank you, Alina Abe, Dan Lazar. We see very many friends in the audience, so welcome everybody to the presentation. I'll do a brief introduction of Alina and Dan. Can everyone see the screen and hear? Everything sounds good and is clear? Yep. Okay, great. So that was a very lovely introduction, Kathleen. She makes me sound much more important than I actually am, so thank you. As she mentioned, I'm in New York City, and I have my crypto certification, as does, I know, Alina. So I'm going to put Alina's slide up here. So Alina is based in San Francisco. Most of you know her from her work with NAR and with FIOPSI. She is a PropTech expert, in my opinion. She's based in the Bay Area in California. She is a PropTech consultant. She is the global coordinator for all of Eastern Europe, Middle East, and Africa. And she's on the PropTech World Council for FIOPSI. And she is the founder of the Silicon Valley PropTech Association. So Alina, do you want to take a moment to introduce yourself, and then we'll do Dan?
Thank you so much for having me. And I just wanted to say that this is great to have a perspective from different parts of the country, just because we all live in a cities where there are a lot of PropTech new tools and platforms just being invented as we speak. I just wanted to mention that I also have a certificate in blockchain in business from Haas School of Business. That was actually from 3 years ago, and I have to tell you that so many things have happened that I find it obsolete. So yes, I can say that I have it, but it's no longer that current, but it made me understood. And I recently took a Metaverse specialist course as well, certification, and I will continue to do it because things change all the time. And I think that I'm not a technologist, but I'm a real estate practitioner, and I think we're all here because these things happen around us, and we need to be a part of them, and to have something to say in the way these technologies are shaping our profession.
Excellent. Thank you very much. And I agree. It is something that is a current and evolving science, and we need to keep on top of it. But as brokers, we're going to do a very high level overview today so everybody can understand the very basic terms. We won't dig too deep, but it will lay a solid foundation for you. And we'll introduce now Dan Lazar from Miami. Dan, do you want to say a few words?
Hello, everybody. I'm happy to be here, along with Christina and Alina. We've been talking about this project for a while, and I think a lot of people in the business, are interested to learn more, to see where this technology thing is heading. And definitely, we're going to hear more and more of this subject in the future. I'm based in Southeast Florida, Miami, Fort Lauderdale area. And I'm involved in commercial investment and new developments for real estate. I came across a project last year related to blockchain and real estate, and we're going to talk about that in a little bit. Thank you for having me.
Unmute. Okay, thank you. It was the bar disappeared with the unmute. Okay, so
And the funny thing, Christina, what I wanted to say, how did you manage to invite two Romanians on this? Because both
that is true.
myself are Romanians.
That is very true. We'll have to have a second conversation about why that took place. But I want to also mention we have Samir Patel in the audience today. So Samir is a legal expert on many of these topics. So thank you for joining us, and feel free to chime in at any time. We will, at the end of this, we have a slide where we will discuss some things that we hope you can join us in that, weigh in on that, because I think we're charting new territory here quite a bit in a lot of these things. And because much of this is unproven and not really thoroughly distributed yet, we do need some legal guidance, and we should all be very careful with what we're representing and how we're managing those things. So just to break it down for what we'll discuss today. So digital technologies encompasses all sorts of digital assets and technologies that we're using in real estate. So everything from when you sign a DocuSign to filing deeds on on the blockchain, there's a lot at play, a lot of moving parts. You probably heard the terms blockchain, crypto, which has a connotation. I will address that before we finish here today, because we're not talking about trading crypto coins necessarily, but we are talking about the technology that underlies the concepts which make up crypto. Bitcoin is one of those. Digital wallets, NFTs, the Metaverse, DAOs, Facebook, which is now known as Meta. Kind of funny, and Web3 and more. So what do they mean? How do they relate to each other? And each of them is an aspect of a technical revolution that is coming, like it or not. I kind of equate it to the internet in 1997. So if you remember, everyone was saying, oh, the internet, So we can choose to ignore that this is happening. We can ignore it all day. But 20 years from now, we'll look back at this moment, and this is 1997's internet, in my opinion. So people may disagree, but there will be things that come, there will be things that go. We will be talking at the MySpace of Web3 someday in the future. But for today, this is what we know and what we have. So these are some of the concepts we're going to dive into a little bit more today. And Alina and Dan are going to help address some of those. So let's just start with Web3. What is Web3? Web3 is the next level internet. I think the easiest way to think about it is it's the next level designed around the concept of decentralization. And decentralization is a big focus on all things blockchain and crypto and so on. It is a concept, and we'll dive into that in just a second. But basically, the ownership is distributed amongst the users and the builders. So it's more peer-to-peer. You have no central body controlling the entity. If you want to think of Web3 this way, think of Web 1. You remember, AOL chat, reading HTML websites and email and very basic websites back in the beginning, we evolved to Web 2, which is reading and writing. So you start to see social media and participation. Things are hosted on a server. You might find software that you access through a server. And Web 3 is a level beyond that, where you read and you write, but you also own. So think of peer-to-peer. Crypto is a really good example because it's something that's peer-to-peer network, but it's something that we own. So you remain in control of your assets online. AOL doesn't control that for you. You have your own digital wallet and you control it. You have a personal portable web with avatars. Oops. And you can use those things to move throughout. Why is it doing that? I don't know. Let's go back. Okay. So if we were to say Web3 is that step, decentralization is the underlying concept of all of this stuff. So I think this little graph, these graphs up at the top give you a really good example of what that means. And I think you can think of, in a way, a bank. A bank is a really good example of this, right? A central bank tells you, you have so much money in your account. You might get a statement, but the bank is really controlling the numbers and all the data it's in their hands. They are controlling it, right? In the concept of decentralization, that is distributed amongst various computers. They're called nodes in a network. And each node checks against the other node to confirm that the data is accurate. So it's almost like a public square where you're saying, you know, Alina's got a computer, Dan's got a computer, I got a computer. We all look at an Excel spreadsheet and we say, yes, these are the numbers. We agree that these are the numbers. And every time a change is made to that ledger, it's a distributed, you know, we each can know and verify that that's true. So there are different ways of decentralizing databases. We're not going to get into the deep, you know, the aspects of this, but know that this is the underlying concept of almost everything that's part of digital technologies and blockchain. And you'll see that blockchain is a distributed, decentralized public digital ledger of transactions. So it's something that's recording transactions in a very transparent, but also immutable way. It cannot be changed. So it's difficult to defraud information that's on the blockchain because it is provable and verifiable by multiple sources. So all the computers in the network need to agree that that data is correct. And any change, well, you can't actually change, but any update to that block notifies everybody else in the network. So you cannot add a new block to the chain unless that data is networked, approved by that consensus of peer computers. So no one computer has all the data. It's really spread across this network. So I hope that actually makes some sense. It's very efficient. It's very transparent, but it does require some energy to run. So that is a question people often have about blockchains. I want to just say briefly about smart contracts. So a smart contract is really nothing but executable code. So when you hear a smart contract, think about what you understand of code in the if and then expressions, right? So if you sign on this line, then that thing will happen, right? If you check yes, then this is the series of things that will happen. If you check no, these are the series of things that will happen. So there are rules that are set in advance, and it is not left to anyone's subjective opinion. It's very clear what's going to happen. So this is a really great contract. And I think this is something you will see in real estate more and more often. DocuSign is a great example of this, right? When you sign a DocuSign, it's basically a code. It's recorded, it's saved transparently, and it's verified. So it's very secure and very difficult to defraud. Alina, do you want to chime in on crypto and maybe give us a little description of how crypto lives on the blockchain?
Yes, of course, you know, and thank you for that, to opening the conversation and getting to that, because when we talk about cryptocurrency, everybody knows and thinks about Bitcoin. And yes, it's true. Bitcoin was the first, the original, the OG of all the, you know, cryptocurrencies, created out of nowhere, out of thin air by Satoshi Nakamoto, who actually published this white paper. And is that actually a currency? Because most of the time we refer to it as currency, but in reality, it's an alternative of currency. It's an alternative currency, an alternative way of payment, digitalized, but it's also an asset. Actually, it transacts as an asset, and probably most of you or some of you already own Bitcoin. You bought it through different third-side, providers, through Coinbase or Robinhood and so on and so forth. And it makes perfect sense. And it has to do a lot with supply and demand at this moment, just because nothing is actually produced, right? So it's not actually a stock in a company that you know how it does and what kind of profit it does and what kind of production, but it has a lot to do with endorsement. It's peer endorsement, as Christina was mentioning before, and it's the rapidity with how many Bitcoins are minted, because actually they're capped. They're capped at 21 million. So we are reaching that very soon. And after that, what will happen after that? Exactly. Like we don't know what's going to happen after that. We're supposed to, if there is a cap to Bitcoin number, then they're supposed to be more valuable and they should have a better value, right? But they might. It's a perplexing question, and considering that there are less than 2 million Bitcoins left, there is a real concern for everyone involved. We thought that as it's approaching this limit, the value will only go up, but was not the case. And Bitcoin took a real dive last year, but there was also because it was used in a very speculative manner. And the point of these cryptocurrencies are not to be speculation instruments, but to be instruments that will make our life easier and more decentralized, and will not depend on a particular bank or a particular Fed or central bank or European bank policies, right? So it will be purely based on, validation from all the participants in a new economic system, new economy, and will empower people and will allow more people to participate in the economy. But Bitcoin is not the only, as you know, cryptocurrency. There are a lot more. Ethereum is the other one that's the second biggest important. And Ethereum is actually, in my opinion, and this is actually a personal opinion, it's even more important than Bitcoin, just because most of the systems and metaverses and blockchains are actually based on Ethereum. Why? Because Ethereum has some privacy settings, while Bitcoin does not. This kind of currencies, they cannot function in void. They just don't function on their own. Yes, you can trade them and you can have them in your portfolio, in your wallet. It's simple to do that. But you can also use them when you do a transaction, when you buy or sell something. And you do have to have a contract, obviously, a smart contract, as Christina mentioned. So Ethereum seems to be the preferred currency, cryptocurrency, that a lot of systems are built on. You'll see that even with the Decentraland and systems that employ NFTs and metaverses, that's what they tend to prefer. And there are other coins, as you see here, the Doge, it's simply valued of its existence. And ultimately, this cryptocurrency world, it will be based on supply and demand, the limited, number of the coins, and ultimately the adoption, the universal adoption of the cryptocurrencies. The easier will be to use, which right now are not that simple to use. I think that the more they will become our everyday life trading habits, the more fluctuations you will see, and probably some of these coins will disappear completely and others will appear, and the strongest and most validated will remain. So as right now, we'll look at cryptocurrencies as assets that we can invest in, and they have a value, a market value. They can come up and down. and also as alternative instruments of payment. So, and making our life easier and more decentralized.
Thank you so much. That was such a great, thorough explanation. I think Alina touched upon it there for a minute as well. The international cross-border aspect of this type of a currency, you have direct control. This is the decentralization at play. You have a wallet. Someone in Portugal has a wallet. Maybe his name is Antonio. I don't know. You want to pass money directly from him. No bank is involved. No permission is involved. It's just a direct peer-to-peer transaction. So
Yes.
this, you can also understand where the legal implications may come in, because you will have tax issues, you will have SEC issues, you will have, there's a very complicated world of how these assets will be treated, which we would not speculate on. We have attorneys who might help us with
That would be good to have
currency.
Samir. I wanted to add one more thing, if you allow me, because you mentioned Portugal, and Antonio, who is probably on, he knows that. But last year in Portugal, the first completely crypto wallet-to-wallet transaction happened. I believe that was in June. It was all over the news. And it was an apartment, I believe it was 3 Bitcoin in the value. The Bitcoin was already down. And I think that it was about $100,000 approximately as a value. But that's because, in Portugal, they have a union or a federation or association of public notaries, which are the attorneys who complete the transaction. And they allow that kind of transaction to happen, as long as it's obviously it's cash. It was a wallet-to-wallet transaction. If the buyers and sellers both have a wallet, it's very easy to transfer. Otherwise, it's very complicated legally and logistically, considering that there are so many different parts, cities, recording office in every country to do it in a legal manner, as Christina said. So maybe Samir will talk about that.
Yeah, and this is the frontier, right? We're having these use cases to see how these things are going to actually happen. And eventually there will be a mass adoption of this, or not. That is the question that remains to be seen. But you may see a lot of properties that are marketed in crypto. And the way you can think about that is Bitcoin has a current value, just like any other foreign currency would have. So you can market a property in Bitcoin, you can figure out what the number is in Bitcoins, and you can market it this way. But what Alina is talking about is a wallet-to-wallet transaction, which means there's no trading for fiat or the home currency prior to the transaction closing. So if you brought Japanese yen to an apartment in New York City, you would have a bank exchange it for dollars at the closing or before the closing, and the transaction would be completed. So that we can do that. We can already do that. Wallet to wallet, it takes away that that currency conversion, and it goes directly from Bitcoin to Bitcoin when Bitcoin travels from wallet to wallet. So that's a big distinction. And that is, something that may happen, and every municipality will have to consider the tax implications of that, or the legal implications. How do they file in the—
I think internationally, so that will be simple, because both buyers and sellers have to be adept of using cryptocurrencies. They need to have wallets. Those are the prerequisite conditions, of course. But then it will be another aspect that, I probably Samir will touch on that when it comes to international transactions, and that's because a lot of countries have anti-fraud legislation. They want to source the funds. They want to know where the funds are coming from. And the probably downside and the dark side of the cryptocurrencies and this kind of trading is that you don't know where the funds are coming from and how many funds are illegal or, laundered and so on and so forth. And this is the problem. This is what most countries would like to know, especially the ones that they're heavily regulated.
Yes, and sanctions and all of this to consider, right? So further to this NFTs are, there's a similarity, right? This is something that, this is a cryptographic token, like Bitcoin is. It's non-fungible, which means, well, I'll explain in a second, but it is stored on the blockchain. So it is the easiest way to think about what an NFT is. It's think of a painting, right? You can have a poster of a Degas in your room. That is not a Degas, right? There's one. And that original is documented on the blockchain. It's very transparent. You can actually track ownership. So someone like an artist or musician can create an NFT. They can watermark that NFT and get a payment in perpetuity for that NFT. And that's all very easy to track because it's all part of the recording on the blockchain. But like we mentioned, other coins or cryptocurrency, and like art, NFTs have a value that is basically set upon what someone thinks it has as a value. So it could be highly volatile, highly speculative, and it's not for someone who's not prepared to deal with those risks, right? So you probably heard of Beeple, the first 5,000 days, which was basically an NFT piece of art that sold for $69 million. And it was a huge newsmaker because, somebody paid for basically a computer file, right? People think, oh, I'm buying a computer file for $69 million. But like art, it has a value. And I mean, it has a particularly specific value because it was the first of its kind. So I think historically people will remember this painting forever. But in the NFT world, much like some of the lesser tokens, the non-Bitcoin, the non-Ethereum tokens, there's a big driver of community. So if you go on places like Twitter, Telegram, Discord, you'll have these communities which are building interest in these NFTs and propping up artists and creating hype around things. And people will lock interesting bonuses into NFTs. So, if you buy this, you're a member of this club. So there's a community aspect associated with NFTs in most cases. And the original owner builds that in. And like I said, that travels with them. When it comes to real estate and NFTs, you may have heard of Proppy. And I know Dawn is on here, Alina, myself, we are crypto certified through Proppy. They had the concept of creating an NFT out of a property, or it's sort of not so as specific as that, but they used an NFT to represent ownership of a property. And inside that NFT, you would find the legal documentation for that property. So basically you were buying an LLC that had ownership of this NFT. You switched the complicated, but it made it so that it was a crypto transaction, right? It made it an NFT sale of real estate. So it made history of it and on its own. And it started in the Ukraine, and then they did a couple in Florida since then. I mean, there have been a number of them. The interesting thing about those sales was they were actually had to convert fiat US dollars into Bitcoin to make that purchase. So it's great, historically very interesting thing that happened, but we are definitely not at a critical mass for doing NFT trades of real estate. Whether that is the route things will go or not, I mean, a year ago, it looked like that could be a very reliable route. Now it seems like that might not be the way things are going to go. So, again, this is where we're talking about the MySpace of the Web3 world. 5 to 10 years from now, we don't know what these things will be, which ones will be successful and which ones won't, but we shall see. I want to hand it back to Alina to talk about the metaverse, or metaverses, really, which is probably a more accurate description, but I'll let her take the lead on that.
Thank you so much. Actually, all these things are so interconnected, and practically the metaverse will be a culmination of everything that we've been talking about. And I wanted to mention, I do not have a certification through Proppy. I'm sorry, nothing wrong with it. I think it's great. It's one of the courses I recommend, but actually my metaverse certification is through a blockchain council. We can leave information about where to take classes probably in the chat, because there are so many places where you can do that. And some classes are general digital technologies applicable in different industries. But of course, Proppy specializes in real estate, and they will be more geared towards the real estate profession. And so is actually Consortia. Actually, these two companies are also part of the Reach NAR portfolio. And as far as I know, they're the only residential and this space digital technologies NFT, Metaverse, blockchain companies, and one is based in San Francisco, the other one right now in Miami. And I think that they are doing great strides, in adopting these technologies in real estate. I just wanted to mention this first. So Metaverse, what in the world is it? So it's actually a shared, immersive, multidimensional, and multi-layered world. I just came up with this, definition here, just taking my learning from different sources. And why do we need this? You might want to. Well, it is a new way of communicating and participating to the global socioeconomic system in different capacities at different levels. And I think this will open up to participation to more people without leaving a physical location. You could be anywhere in the world and participate in different capacities to this new immersive world. You could go to a concert. You could have a global open house. Let's say that you schedule an open house 2 to 4 in San Francisco on Sunday afternoon, and it's maybe raining and terrible and nobody is coming to your open house, and you have a beautiful multi-million-dollar villa, but somewhere in the world is sunny, and somewhere in the world, somebody might want to check out the real estate in San Francisco or in Miami or in Chicago or in New York. And they might have nothing else to do but love real estate and really be interested in investing. And you give them a code and they will join, and they can have, thanks to the great images and digital design, they could put on a pair of goggles, or maybe not in the future, we might not even need that, and be immersed into their open house. And you can give them a tour right there and then, take them around, because we already do that with Matterport, right? So this is a next level of Matterport, because all things are connected. So how are we connected in a situation like that? Because I took simply the real estate, example. So for a few things, first of all, you had the graphics, which were already there, right? We had the photography. You'll have a 3D tour, in a way or another, so you are immersed with that. Then you have the goggles, and this is already a mixed reality or an extended reality. So you see there that I'm using terms as AR, which is augmented reality, virtual reality, mixed reality, and extended reality. So we are already familiar with AR and VR. They've been around for a long time in the gaming industry, but right now this is coming. It could be easily adapted into the real estate industry. But now I'm taking a real example of a real house. So that's not necessarily augmented or virtual reality. That's rather a mixed reality, just because you'll have the real images of the house and the pictures of the interior, and you could be immersed into it. So that is an MR and an XR. So you can be immersed in it with your own avatar. And that is where the mixed reality comes in. You pick one, and your avatar is just moving throughout the house, is checking out the kitchen, and so on and so forth. Looking on a window, you can see the real view of the house, which is very important. Then you feel like you already tested the house in a way or another. And then maybe at the end of this, if you liked it, then the real estate agent will be able to deploy a smart contract, and you might be able to make an offer. And that will be endorsed electronically, by the seller. And maybe let's assume that both are adept to using cryptocurrency and they already have wallets. And maybe even if the buyer is in, let's say, Dubai or who knows where, and you are in San Francisco, the transaction will happen in less time than it would usually do. Maybe you will also have the possibility to send electronically all the disclosures and all the documents, and all will be verified. And voila, you could actually do the transaction and record it on the blockchain. So this metaverse actually has all layers of the digital technologies we've been talking about. So it implies, first of all, in very high graphic technologies, digital technologies, contracting, communication, avatars, NFTs, just because how else you're gonna record that? You will have the title as an NFT and record it on a blockchain. So you'll see everything that actually we talked about it will work towards creating this new world where all these digital technologies will be deployed in a way or another, and they will be used. Now, let's talk a little bit about the metaverse, which is complete virtual world, like the Decentraland, okay? Because a lot of you know about the Decentraland. They made a lot of waves when they had a very pricey transaction, over 2 million, I believe it was 2.4 million, paid for virtual land in the Decentraland, which is also limited. It's not infinite. Normally, if we think about metaverse and the definition itself, it's an unlimited, infinite world. But they are, of course, some limitations, self-imposed in some cases, like the Decentraland. So the land actually on the Decentraland is actually sold out. You cannot longer do that, but you can trade it, you can resell it, and you can develop it, right? So why in the world do we need that? Don't we have enough properties as it is in real world? Why would we buy virtual land and virtual properties, and why? It seems like a game, right? It seems silly. And yes, it is. That's what I thought at the beginning. At the beginning, I thought that it's silly. And then I thought, okay, this is my choice to decide and to stay at this opinion that it's silly, or I could look into it and see the possibilities, because if everybody around me sees possibilities, then that must be something in it. So it's another way of actually acquiring assets, just like when we buy stocks in companies or where we buy real properties in real world, and real land. This is also another asset. And there is a risk involved, of course. You might buy some land on the Decentraland with 2.4 million, and you might have to resell it with $1 million, or you might be able to actually develop it to build, an 8-story building of condominiums and be able to sell the condominiums separate as NFTs to different buyers. And you will have to do tokenization as well when we talk about that, because you have to split the NFT into multiple NFTs. And I don't know how this is done yet, because I don't have a legal answer to that, but that might be the case. So it's another asset, and it's another created value. If that will hold, and how will hold in the future, it's to be seen. But yes, so we can use metaverse for real life things and assets, or we can use it in a virtual world. And I hope that this was a good explanation. I would be more than happy to explain, because I just took, it's fresh in my mind, the class I just took with Blockchain Council. So that's what I have to say. If you'd like to add, please, Dan and Christina.
Well, I think just to think about, as international realtors, what the opportunities are for this are unlimited, really. I mean, limited by your imagination, because eventually we will be able to walk through properties that don't yet exist. I mean, we've been using elements of this technology for a long time. In New York, we have very tall buildings. And if you buy on the 70th floor, you want to see what the view looked like on the 70th floor. So they used to film, in a crane or by a drone, and would be able to show you that view from that perspective. But, imagine being able to go into a virtual elevator, press a button, walk through a property, try different furnishings, try your furnishings in a property. I mean, it's really limitless. And to be able to shop for a property in the Caribbean from Dubai or New York, I mean, these are just the beginnings of what's possible with this technology. So I think if anything is really exciting about this, and if you think of ways that really we may be actually using this type of technology in a serious way, I think the metaverse is one of the most likely to stay on the course that it's on.
Yeah,
and
I think that, like we're actually talking about our profession, real estate, but if you think about outside our profession, then metaverse is actually one of the best technology to use to try to do things that they will be extremely difficult to perform jobs, or very, very risky. Like, for example, it could be used in the field of medicine, before performing a very, very difficult surgery on someone, you can practice a lot, you know, in metaverse, or jobs that they're very dangerous to human beings. You know, maybe you can be used in the military, for example. And this is actually one of the very early applications, because you might use it in military fields to detone bombs, right?
Yeah,
you don't
combat
want to
training
the life of a person, you know? You can do a very precise and very dangerous jobs as well. But we can also benefit. We don't have such a dangerous jobs, except to protect our consumers and ourselves of fraud, and make sure that things are happening properly and people have proper titles. But definitely, in our job is such a no-brainer. You know, the visuals, the tours, the distance, everything. You know, everything will be smaller. The world will become much smaller, and we will be able to participate in different capacities without leaving our chair.
Yeah, thank you so much, Alina. And also we will put in the chat some of Blockchain Council and some of the other opportunities for you to be certified in this. And there aren't a ton of them. I mean, there are a few different ones. And you know, certification is one thing, but it is a constantly evolving body of knowledge. So it's on us to continue to take courses and listen to seminars and, you know, participate in to keep on top of what's happening, because things change very rapidly in this particular segment. I want to now switch over to tokenization and fractionalization, which in my opinion is one of the most interesting things about digital technology, and the ability to slice up an asset into many pieces and offer an ownership share to people who would otherwise not have access to that opportunity. And I think of affordable housing as another amazing opportunity for this, because you often see development happening in countries where the community is left out of the upside of that development. So to me, one of the most exciting things about this is to give people who maybe can't afford to participate fully in the purchase of a property or a condo or something that's being developed, a commercial entity, but it does give them an opportunity to enter at a smaller level that investment opportunity and to profit from that. So Dan, maybe you can jump in and explain a little bit more about tokenization and fractionalization and your experiences with that.
Absolutely. And actually, this is my favorite subject when it comes to technology and real estate, because I see tokenization and this process as a real possibility in the real world. Basically, you know, the crypto transactional real estate are not really real estate peer-per-peer. It's more like you transform a legal entity into an NFT and you sell the NFT that owns actually the real estate property. So it's not like a real crypto transaction per se. Tokenization, what is tokenization of real property? Involves digital fraction representation of asset rights and ownership via blockchain technology. This is in theory a process that is going to make everything a lot easier, a lot more fluid. Is based on DLT, which is digital ledger technology, and smart contracts. You're talking about smart contracts and how they execute when certain conditions are present, with records available for everybody and permanent in the blockchain encryption. Now, in real world, legal entity can issue, you know, tokens and sell them to different investors, right? And with each token, you can get ownership and you can get some of the bundles of rights related to the real estate property, right? This can be really appealing for real estate investors, like rates, you know, like traditional way, but this will make it a lot more fluid, because in theory, you can sell, you can make transaction with these tokens, make it more affordable for individual investors, right? Now, last year I was, you know, approached for a real project when it comes to this. So the basic idea was to build like a physical mixed use property, commercial property, retail, and multifamily, right? And they were planning to issue tokens and sell them and transact them on the market, right? Great idea, right? Like great application. Now, there's many aspects, legal aspects that put this project on hold, and they're related to like real estate regulations, securities laws, taxation, and blockchain regulation, right? Depending on the location of the project, depending on the location of each individual investor, a lot of legal issues can arise from on this process. And in the end, I feel like this is going to be the future. It's just each local regulation needs to be dialed down, and at the global level, we should have more communication and more uniformity when it comes to policies, right? And with that being said, I would like to invite Samir Patel, with Holland and Knight, law firm, and he can explain a little more about the legal issue when it comes to this tokenization and doing fractional real estate assets.
Thanks, Dan. So, as you all are real estate agents, you're probably well aware of a REIT, which is a real estate investment trust. And the interest in that REIT, at least here in the United States, of course, I am a US-based attorney, those interests in those REITs are securities, and they have to follow the law of the Securities Exchange Commission. And the selling and trading of those securities needs to go through many different hurdles. And those hurdles, at the end of the day, kind of take away the luster of having a tokenized REIT or having a REIT on a blockchain. I will say that I started off as a real estate attorney here at Holland and Knight. My specialty is blockchain technology. And so to be candid about tokenization and fractionalization of real estate, I could certainly tell you that I've gone down that rabbit hole with many a different client. And eventually we get to the point where the cost of registering that fractionalization interest in real estate is not worth the time and the monetary expense to do such a thing, because at the end of the day, the securities laws dictate that you can't sell that REIT to the average Joe on the street. So I know that in the blockchain space, there's been a lot of phrases being used around. One of those is a democratization of real estate, that blockchain can help democratize real estate. And I guess what that's supposed to mean is your neighbor can buy $5 worth of a fractional interest in a piece of real estate. Now, that's just not the case, at least here in the legal climate of the United States. It's just not going to happen. And the reason why is because of the kind of hurdles that you need to jump through in order to have an exempted or registered securities offering. And I'll give you an example. So one of the common kind of securities offerings that these individuals and companies want to use when tokenizing a REIT is regulation crowdfunding. And that is the regulation and securities offering where you are allowed to generally solicit the whole population of the United States. But those individuals that register or that buy an interest in this crowdfunding need to have some kind of sophistication within blockchain technology. They will sign a document that says so. Furthermore, depending on the actual kind of securities, they have to have a minimum threshold of income or assets under their belt. Furthermore, crowdfunding offering, you can only raise $5 million. So there obviously, as we all know, there are properties that you can purchase for under $5 million that would generate some kind of profit at the end of the year or year over year. And those properties are vacation homes, maybe they're kind of shared workspaces, whatever, what have you. But to actually go down that route of doing the regulation crowdfunding exempted offering, you're already going to be spending probably close to 7 figures already in there. And that's even before doing any kind of target audience survey and determining whether or not there is an actual market for this. There are other kinds of securities offerings that you can do for fractionalization. Those are private exempted security offerings like Rule 506. Rule 506 says that those individuals that are buying interest into these security vehicles they need to be accredited investors and have a minimum income threshold of $200,000 over a year. Furthermore, there's only a cap on how much you can raise. But that's just the actual offering of the security. Another part of democratization and this notion of democratizing real estate is the ability that once you get this investment vehicle or you get this token, you can easily sell it to somebody else. Well, if that investment, if that token is a security, again, the Securities Exchange Commission has very rigid rules about how and where you can sell that security. So you wouldn't necessarily be able to hop on to a forum and say, I have this token that I'm looking to sell. Furthermore, there aren't exchanges. They're going to be known as alternative trading systems because theoretically you want them to operate on a blockchain. But there aren't ATSs, as the acronym is, or abbreviation. There's not an ATS that is available to sell these tokenized blockchain assets. And so you can do an over-the-counter transaction. And that's certainly a viable option. But being pragmatic about it, where are you going to find this person to meet up at a Starbucks and transfer over your interest?
Right. So the liquidity, which is a big part of what they've been really which is supposed to be a big benefit, the liquidity really isn't there because it's just as difficult or more difficult than creating an LLC, slicing it up and having various shareholders fractionally own the asset, which would be a lot cheaper, right?
Yeah,
That's absolutely correct.
For example, in San Francisco, as you probably know, Samir, we have tenancy in common, and we've been doing this for a long time, which means you have one building, and because we have very strict rental laws here, and because the landowners are usually, they are penalized if they do evictions, then the only way to sell a property that was a former rental is to split it in TICs, tenancy in common, which means will be an interest, a fraction of the property for each apartment, and sell it that way. And there are very few banks who offer this kind of financing, but we've been doing this for a long time. So in theory, it will be easy to do something like that as an NFT, right, or a token, and recorded it. But it's such a small market. It's just here in a highly rental regulated market like San Francisco or New York or Santa Monica, that it doesn't even have a secondary market for mortgages, for tenancy in commons. That's why those are portfolio mortgages, and very few banks will do it, which are mostly local to us. So that's an example.
That's right. So Samir, in your opinion, I mean, does this concept have legs? And then where do you see the future of tokenization being most likely to happen, if anywhere?
So in my opinion, I think tokenization of real estate property is very far off. The reason why it's not about laws, it's not about the behavior, the target audience, it's literally about the technology. And so when you have a mortgage, you need to record that mortgage in your county recorder's office. And your county recorder's office may be the most archaic government building that you've ever been into. And to think that a county recorder's office is going to revamp their whole technology stack, their whole infrastructure, in order to be on a blockchain, in order to be a node on a blockchain is a pipe dream.
And there are an awful lot of county clerks' offices.
Yeah, I mean, they don't even, here in Miami, they don't even have air conditioning, they just have fans.
Yeah.
And so that is the main hindrance to all of this. That is the main block for why real estate on a blockchain is not going to work. And it's not going to work anytime soon. Now, there are countries in the world that are putting land registries on a blockchain, Georgia being the first one.
They dropped the project. They were, but not. Estonia, but they're not really on blockchain. They're easy to record transactions, maybe easier than the US, but they're not on blockchain.
So Georgia no longer does it. And there are other places like India, Rwanda, Russia. They're looking at land registries. Now, obviously, these are R&D projects as well. So once you get, so I saw somebody put Cook County, Illinois. So what happened in Cook County, Illinois was the transaction was done through the county recorder's office. And I think it was IBREA, IBREA. And they just took a copy of that deed, put it in a PDF, and then put the PDF on a blockchain. So it really wasn't it. It was purely publicity. The actual transaction, the transfer of the deed, none of that was on a blockchain. The only thing on a blockchain was the PDF of the actual deed. That was the only thing. And that was put on the blockchain by a central actor, a for-profit company. So again, to underscore the sustainability or maybe the future of real estate and blockchain, again, the main ingredient, the quintessential factor is getting the governments on board with the technology and creating that technology stack. And once you are able to put a deed on a blockchain, then you could start using these other kind of trinkets that are involved with blockchain technology, like smart contracts. Then you could apply smart contract to a digital deed that can splice up that deed in 50 different ways and use dates as comparison to, collect county property taxes and whatever what have you. But up until that point in time, the technology stack is definitely going to be the first and most important hindrance to this. Secondly, the liquidity involved with transferring these interests in real estate is just not there. Third, as more companies try to do something like tokenizing real estate, they end up jumping through more hurdles that's even necessary than to just trading it in what we call meat space. You heard about Metaverse. What we are all in was what's coined as meat space. So so Proppy being that one, I think they were in Tampa, they did it last year. As Christina, Alina, and Dan articulated, they sold an interest.
Can you explain everyone how exactly they did it, just because everybody's curious to know how they did it. And you explained it the other time, I remember. It was pretty complicated.
So what they did was they had a house. The owner of the house created an LLC. They transferred the house interest into the LLC. They created articles of organization for the LLC that were registered with the Florida Department of Commerce. They jumped all through the hoops and meat space in order to have the home subsumed by the LLC. The NFT was literally ownership in the LLC. So they sold the token. The token holder, whoever that person was, then becomes the owner of the LLC. So what they ended up having to do is going back to the state of Florida and change the articles of organization. And there's stamp taxes involved with that as well. So there is a cost to that. There's a back end cost to that, but they had to go back to the Department of Commerce in Florida, change the ownership of the LLC. And then once that owner changed that, then they had to update the deed to the mortgage, whatever it was, to the house to now reflect the new owner of the LLC. So it really added more steps.
Right, instead of
necessary,
it actually made it more complicated.
And in your opinion, how much more expensive that was, I mean, in time and in actual fees, because, there are fees involved to open the LLC and then to record and so on and so forth. How much more money, it had to cost to do
I mean, that's a very hard, I don't know the value of the property. I'm not too sure. I don't have any visibility into property. Just going off the top of my head, if you wanted something from left field, I would say $25,000 just to do something like that. I'm sure Proppy took a fee. There are there's gas transactions in order to effectuate transactions on the blockchain. So I would say that, but again, purely that's just pulling a rabbit out of a hat.
So thank you so much. That's super helpful. We're probably getting close to wrapping up here. But I think you should now have at least an overview of the basic concepts. I mean, these are the things that underpin any new technology that comes along. So if you have a grasp of those basic ideas, you'll understand how the application of them can happen, or, you know, and we will see what gets picked up and what doesn't. And I think
maybe we should all end up with something positive, like we all say
Yeah.
something that actually concretely could be done. Okay, Samir kind of, you know, like gave us a reality, just because he has to, and then that's normal. That's why we are not referring to these things from legal standpoint. We do know that we are a highly regulated market. We have that. Dan was mentioning about his experience with tokenization. We're talking about NFT. So what people do these days, and I've tried it myself, I have to say, very recently, I had the listing, and I actually tried through consortia, what they tried, and they are actually bound to do right now, is to pre-certified floor plans, for example, and inspections, to put them on a chain, to the point that the banks will consider them in the appraisal process, and they will be appraisal grade. So they will be certified, you know, and validated, you know, before that, and they will make the transaction and the appraisal process simpler. So this is an idea. It's not legal yet, but this is what they are trying to do and work towards that, to the point that Fannie and Freddie will accept those, you know. And so floor plans are one idea. You know, there are a lot of apps right now that we can use, and it will reduce the cost of us ordering a floor plan for our clients. And they are getting more and more recognized and official and standard and legally considered, because, as you know, when we talk about floor plans, they are proprietary. You know, you assume a lot of risk. You have to have a third party that will do that, because there are always errors in measurements, and people are getting sued right and left for small differences or discrepancies in what they disclose and not. So that will be one thing, you know, and I try to do that and see how accurate it is. Then others will be, you know, just using AR, you know, and just having a global open house, immersive open house, by using AR and VR and goggles, even if they're not connected yet to the entire metaverse, even if that it's not technically metaverse. You know, people use actually the term with ease, but we are not completely connected. Unless all of those conditions met that I mentioned, it's not a metaverse. It's a gamified version of open house, but that's not bad. That doesn't mean that it's bad. It connects us easier than it used to connect us before, much easier. So that's what I see being able to use. Or also, you know, if people want to have a little token, to have a NFT of their property and keep it, you know, at a cost, and recorded it on some private blockchain or metaverse, you can do that too. You know, let's say that you have this beautiful villa and the sellers are selling it, but they also create an NFT and they can sell it together with it, which will be a digital interpretation of version of the actual property, or they can keep that as a token or as a souvenir or whatever, you know. So those are the things that I see that could be used, but I'd like to hear you guys as well, what you think.
Dan, do you want to weigh in, and then I'll wrap up?
Yes, I think this is like on a short term, I think we can do that. And I feel positive about this. In the near future, technology advances so quick, and if you think about it, 5 years ago, a discussion like this will make people really confused, you know. So I feel like there's a lot of project. I think there's as we advance with more technology and more people involved, I think that there's going to be more open doors in real estate field as well. In general, of course, but in real estate, I see applications. And although it might take a while with legal aspects, with the limitations, with the global aspects of this this technology, I'm feeling very positive about this. And like on the daily basis, we can do something like Alina said, you know, even tokens, instead giving a gift of like a new cutlery or like I don't know, like some picture frame, you know, we can use like a nice token, you know, with the house or the property itself. Yes.
Yeah, I agree. I think anything, I'm excited about anything that reduces friction in a real estate transaction. So if that starts with DocuSign, I know I mentioned that a couple times, but DocuSign, I mean, if someone sends me a PDF attachment of something to sign, or they send me a DocuSign, which one do you think is going to get signed first? I mean, let's be honest. So anything that reduces time and creates more efficiency in a transaction, I think we are all going to embrace, and replicating things we do all the time, right? We can automate things we typically replicate over and over and over. So I'm excited about any technology that does that. And then I'm super excited about the marketing opportunities. You know, we talked about the AR, VR, but we are an international group. And I can't think of anything better than trying to sell international real estate by being able to give people much more of an experience than they currently have with, you know, photos and floor plans. And Matterport's a step in the right direction. It's a huge step in the right direction. So, you know, imagine taking that to the next level, and the confidence, also the efficiency of time, right? We used to have people come to a real estate listing and it wasn't for them. They couldn't see the street outside. They couldn't see the 5 flights of stairs inside. You know, they couldn't see any of this. So imagine more of that when you have people who actually come look at your properties. They will have fully vetted that property before they even get there. If they get there, you'll see a lot more sight unseen transactions. So I think all of that is very exciting. We didn't really even talk about ChatGPT and AI, but I think I hear that one of the companies, shall remain nameless, is incorporating that into their listing descriptions. So you can have ChatGPT helping you write your listing descriptions, translating listing descriptions in foreign languages, writing them on the fly in any language you want. Imagine those capabilities for your newsletter, for your blog posts, for social media, whatever it is. So I think these are the things that we're going to really embrace. So, you know, anything transactional, anything marketing wise. And personally, I would love to see tokenization take root, as I mentioned earlier, for the more equitable, international, cross-border, cross-investor, you know, open the
And
opportunity.
liquidity of assets, yes, actually, because this is the problem. You cannot easily transfer assets, the real estate assets from, you know, across the border.
And it isn't
And
tomorrow.
for that, they need to be
Yeah.
liquid. And
Yeah.
that path to liquidity might be longer than we expect and we know, but, you know,
Someday
it's
we can
not.
look forward to it.
Yeah.
So we look forward to the day that is a thing. So I'll hand it back to you, Kathleen, but thank you, Alina. Thank you, Dan. Thank you, Samir. Really appreciate your joining us today, and everyone who came to listen for this hour. We appreciate you. Thanks so much.
Thank you so much.
Thank you so
Thank you.
much. Wow, that was an amazing presentation. So much knowledge packed into an hour. I want to thank Christina, Alina, Dan, and Samir at FIOPC USA. Thank you, Allison. And the recording will be on the FIOPC USA YouTube channel. The link is in the chat. So if you would like to subscribe, please do so. And everybody have a great day.
Thank you so much.
One more, thank you.
Thank you.
Thank you.
It's in the chat. I have to go find. Where in the
Thank you
chat?
so much. Goodbye. And thank you to Samir a lot too. I didn't mention in my text, but I did now.
Can that be sent to us, the link, Kathleen?
I can send it to you, Christina.
Thank you so much, Kathleen. Thank you.
Thank
you,
you,
Okay.
everyone.
Great seminar.
Thank
you.
Thank you.
I'm sorry, how do I search it in YouTube? What I have to put?
I'll put the link in the chat.
Chat, what is the, oh, in here, chat,
I just
chat.
dropped it in the chat. It's in there twice. Yep.
Okay, thank you very much. It was great,
I'll
thank you.
stay on for a minute so you can grab it.
Thank you, Kathleen.
Oh, you're welcome. Thank you, Allison.
Thank you,
You
Allison.
got it. Thank you, everybody. That was amazing.
The last thing.
Thank you.
Bye.
I feel like I know something now.
I don't, oh, here it is. Okay, I have copy paste. This is a lot to write. Copy.
You can actually download the whole chat if you like. You can
Okay.
save the chat, and then that way everything will be in there.
That's right. Thank you very much. It was great. I enjoyed it. Thank you.
Thank you.
Truly, I mentioned this just in case you didn't see it in the chat. This was worth our membership. The level of education that we received. So thank you all for giving of your time. It was so generous of you. I appreciate you all. Take care.
Thank you.
Bye-bye.
All right, Kathleen, I'm going to end it. Are you good with that?
Okay, I'm good. Thank you. Bye, everybody.
Thanks,
Thank you.
Bye, everyone.